Breaking news in the world of technology: a surprise profit beat from Micron Technology is sending shockwaves through the market, and experts are calling it a growth bargain in the AI sector. With sales skyrocketing by 93% year over year and a forecast for even more growth in the coming quarter, could this be the investment opportunity of the year? As we dive into the world of Micron Technology, it's clear that innovation is the key to success in the tech industry. I've been following the company's progress, and it's impressive to see how they've managed to stay ahead of the curve. The rapid growth and advancements in areas like artificial intelligence, high-bandwidth memory, and cloud computing are a testament to the company's commitment to innovation. One of the key factors that sets Micron apart is its ability to adapt to changing market trends. The company has made significant investments in research and development, which has enabled it to stay ahead of the competition. For example, Micron's high-bandwidth memory solutions are in high demand due to the increasing need for faster data transfer rates in applications like artificial intelligence and data analytics. As an investor, it's essential to understand the importance of innovation in the tech industry. Companies that fail to innovate risk being left behind by their competitors. In the case of Micron, the company's commitment to innovation has paid off in a big way. The company's stock price has increased significantly over the past year, and it's clear that investors are taking notice of the company's growth prospects. Now, let's talk about the value of diversity and inclusion in the workplace. Micron Technology has made a concerted effort to create a diverse and inclusive work environment, and it's clear that this has had a positive impact on the company's success. A diverse workforce brings different perspectives and ideas to the table, which can lead to increased innovation and business growth. I've been impressed by Micron's commitment to diversity and inclusion. The company has implemented a range of initiatives aimed at promoting diversity and inclusion, including training programs and employee resource groups. These initiatives have helped to create a culture of inclusion, where employees feel valued and empowered to contribute to the company's success. As an investor, it's essential to consider the impact of diversity and inclusion on a company's bottom line. Studies have shown that companies with diverse workforces tend to perform better financially than those with less diverse workforces. This is because diverse workforces are more likely to bring new ideas and perspectives to the table, which can lead to increased innovation and business growth. Now let's talk about the potential of AI growth stocks. I've been following the trend of AI growth stocks, and it's clear that they have the potential to be a game changer in the tech industry. However, it's essential to approach these stocks with caution. The hype surrounding AI growth stocks can be overwhelming, and it's easy to get caught up in the excitement. As an investor, it's essential to do your due diligence when it comes to AI growth stocks. You need to carefully research the company's technology, its competitive landscape, and its financials. You also need to consider the potential risks and challenges associated with investing in AI growth stocks. One of the key risks associated with AI growth stocks is the risk of overhyping. The hype surrounding AI growth stocks can lead to unrealistic expectations, which can ultimately lead to disappointment. Another risk is the risk of regulatory challenges. The regulatory environment surrounding AI is still evolving, and it's unclear how governments will regulate the use of AI in the future. Despite these risks, I believe that AI growth stocks have the potential to be a game changer in the tech industry. Companies like Micron Technology are at the forefront of AI innovation, and their technology has the potential to revolutionize the way we live and work. Now, let's talk about the importance of sustainable practices and community support. Micron Technology has made a commitment to sustainable practices and community support, and it's clear that this has had a positive impact on the company's reputation and bottom line. As an investor, it's essential to consider the impact of a company's sustainability practices on its reputation and bottom line. Companies that prioritize sustainability tend to have a more positive reputation, which can lead to increased customer loyalty and retention. Sustainability practices can also lead to cost savings and increased efficiency, which can ultimately lead to increased profits. One of the key ways that Micron Technology has prioritized sustainability is through its commitment to reducing its environmental impact. The company has implemented a range of initiatives aimed at reducing its energy consumption and waste, including the use of renewable energy sources and recycling programs. Another way that Micron Technology has prioritized sustainability is through its commitment to community support. The company has implemented a range of initiatives aimed at supporting local communities, including education and job training programs. As an investor, it's essential to consider the impact of a company's community support initiatives on its reputation and bottom line. Companies that prioritize community support tend to have a more positive reputation, which can lead to increased customer loyalty and retention. Community support initiatives can also lead to increased employee engagement and retention, which can ultimately lead to increased profits. Now let's talk about the potential of value stocks. I've been following the trend of value stocks, and it's clear that they have the potential to be a safe haven investment option in a market downturn. As an investor, it's essential to consider the potential risks and challenges associated with value stocks. Value stocks can be more volatile than growth stocks, and they may not offer the same level of growth potential. However, value stocks can also offer a more stable return on investment, which can be attractive in a market downturn. One of the key ways that value stocks can offer a more stable return on investment is through their lower price-to-earnings ratio. Value stocks tend to have a lower price-to-earnings ratio than growth stocks, which means that they may be more attractive to investors who are looking for a more stable return on investment. Another way that value stocks can offer a more stable return on investment is through their lower volatility. Value stocks tend to be less volatile than growth stocks, which means that they may be less likely to experience significant price swings. As an investor, it's essential to carefully research value stocks before investing. You need to consider the company's financials, its competitive landscape, and its growth prospects. You also need to consider the potential risks and challenges associated with value stocks, including their lower growth potential and higher volatility. Now let's talk about the importance of staying up to date with industry trends and emerging technologies. The tech industry is constantly evolving, and it's essential to stay ahead of the curve in order to remain competitive. As an investor, it's essential to stay informed about industry trends and emerging technologies. You need to be aware of the latest developments in areas like artificial intelligence, high bandwidth memory, and cloud computing. You also need to consider the potential impact of these technologies on the companies you invest in. One of the key ways to stay informed about industry trends and emerging technologies is through research and analysis. You need to carefully research the companies you invest in, their competitive landscape, and their growth prospects. You also need to consider the potential risks and challenges associated with investing in emerging technologies. Another way to stay informed about industry trends and emerging technologies is through networking and community engagement. You need to connect with other investors and experts in the industry in order to gain insights and stay informed. As an investor, it's essential to prioritize social and environmental responsibility in your investment decisions. Companies that prioritize sustainability and social responsibility tend to have a more positive reputation, which can lead to increased customer loyalty and retention. Sustainability and social responsibility can also lead to increased employee engagement and retention, which can ultimately lead to increased profits. One of the key ways to prioritize social and environmental responsibility is through ESG, environmental, social, and governance investing. ESG investing involves considering a company's environmental, social, and governance practices when making investment decisions. Another way to prioritize social and environmental responsibility is through impact investing. Impact investing involves investing in companies that have a positive social or environmental impact. As an investor, it's essential to consider the potential risks and challenges associated with ESG and impact investing. ESG and impact investing can be more complex and nuanced than traditional investing, and they may require a more detailed analysis of a company's sustainability and social responsibility practices. In conclusion, as an investor, it's essential to consider the importance of innovation, diversity and inclusion, sustainable practices, and community support in your investment decisions. Companies that prioritize these factors tend to have a more positive reputation, which can lead to increased customer loyalty and retention. These companies also tend to have a more stable return on investment, which can be attractive in a market downturn. As we conclude our analysis of Micron Technology and the tech industry, it's clear that there are several investing strategies that can be gleaned from this story. One of the key takeaways is the importance of diversification. By investing in a range of companies across different sectors and industries, investors can reduce their risk and increase their potential returns. Another key strategy is to focus on companies that are innovating and disrupting their industries. Companies like Micron Technology that are at the forefront of innovation and disruption tend to have a higher growth potential and are more likely to outperform the market. It's also essential to consider the importance of sustainability and social responsibility in investment decisions. Companies that prioritize these factors tend to have a more positive reputation, which can lead to increased customer loyalty and retention. These companies also tend to have a more stable return on investment, which can be attractive in a market downturn. Finally, it's essential to stay informed and up-to-date with industry trends and emerging technologies. By doing so, investors can make more informed investment decisions and avoid potential pitfalls. In conclusion, the story of Micron Technology and the tech industry offers several valuable lessons for investors. By diversifying their portfolios, focusing on innovative companies, prioritizing sustainability and social responsibility, and staying informed about industry trends, investors can increase their potential returns and reduce their risk. Thank you for joining me on this episode of NewsPod AI from Big Blue Ceiling. If you have any questions or comments, please don't hesitate to reach out. Until next time, stay informed and stay ahead of the curve.